Hello, I'm Anne-Maree Byworth, and today I am having a chat to David Bernstein of Vostok. And David is going to tell us a little bit about the activities of his firm and how he sees the place where he invests. Over to you, David.
Thank you very much. Vostok Capital Partners is an advisor to funds investing in Russia and the former Soviet Union. We've been in business since 1994. We've invested in about 60 private equity investments since 1994. We recently closed our fifth fund, which was about $1.5 billion of capital. So we've been consistent investors in private equity space in Russia. That's all we do. And we've been there since 1994.
That's fantastic. It's a long time to be established in an emerging economy in particular. Maybe you can talk about the evolution of the market, what you've seen over time and where you see the market today.
Yeah, so there are two issues. First is the market overall. And we took a view when we started investing in 1994 that Russia, or a Russian consumer, is really not that much different from a Western European or a North American consumer, and that the structure of the economy, given time, would more or less resemble the structure of a Western European, North American, Australian, whatever economy, with some Russian nuances, of course. And so we went from an economy which was completely state-controlled, where we had really a base effect of zero in most consumer sectors, consumer services, and we took a view that over multi-generations that this development would happen. So it was really based on a kind of long-term view that over time the economy would develop, resources would be applied to serving consumers and services as opposed to kind of a state-controlled economy. We assumed, and I think that we were right, that there would be some bumps along the way. And I think that we're probably about halfway through what we think is probably a 50-year generation. So overall, there has been kind of an overall push towards macroeconomic growth. And on the ground, that's where things have changed, kind of who the competition is, what are the opportunities, who we're facing. That's where the differences have changed.
And in terms of the enabling infrastructure, the people that would work alongside you in terms of doing the investments, adding value and exiting, has that enabling infrastructure developed over time to keep up with what you're doing and the activities of other people trying to do private equity in Russia?
I think that, again, there's a bifurcation because there's a sense that there really aren't that many Russian private equity funds, which is true. If you look at organized Russian private equity funds with capital from outside that are structured as limited partnerships, there really are only a handful. But if you look at Russian private equity deals, over time there have been hundreds, and these are mostly done by Russian entrepreneurs or owners of businesses who are buying, developing, and selling businesses. I think that what has benefited us is that we've been a Russian firm. We have 35 people on the investment team, and 30 of us are Russian. I'm not Russian, I'm American, but so we're very local, very on the ground, which you need to be in any emerging market, but especially in Russia, where the owners of businesses that we're investing with or partnering with, and the managers are young for the most part. It's a young economy, and so the people who are sitting across the table on our side are the same age, have the same mentality, have been through the same shared experience of the end of the Soviet Union, the 90s, 2000s, and so when you're sitting across the table, the mentality, we're still in a phase where the investments that we're finding are with first generation managers or owners who have founded the businesses themselves. So really having somebody who can speak to that and can really kind of sit down. So yes, things have changed around the margins, where we've added not only investment people, but we've added we have a tax advisor, we have 5 lawyers, we have 4 people on a finance team who are helping companies implement their first IFRS audit, let's say, or budgeting systems. We have an HR director who really is mostly helping companies source CFOs and purchasing managers and that sort of thing. So around the margins, we've been able to broaden the team so that our value add is kind of broadened. But the core philosophy has been the same. It's finding great businesses, which isn't always easy to do, but finding great businesses, partnering with them, and then taking a 5-10 year view and working with them.
Fantastic. You are fairly Russian-centric, I think, in your approach to investment, but you have invested over the borders. And at cross-border transactions, how interested are you in them? Where do you see growth? Or do you not see them as particularly interesting at this time?
Yeah, so our funds have remit to invest in Russia and the former Soviet Union, and historically we have had investments in some of the non-Russian CIS or former Soviet Union countries, including Kazakhstan and Turkmenistan and Georgia and Ukraine. But for us, really, Russia has really been the kind of focus for a few reasons. First, Probably about 90% of our investments right now are in Russia, and we have a few in Kazakhstan right now. And why is that? Russia is a $2 trillion economy, 140 million people, largest consumer market in Europe. So you have the ability, we're investing in medium-sized businesses, and so even in Russia, because of where we are in the under-penetration story, particularly in the regions, you can really scale up a business in Russia without having to go cross-border. And so partially you have a market itself, which is really still big enough that it can handle growth without having to go outside. And also we're local investors in Russia. We have an infrastructure in place. We have kind of an understanding of what's going on the ground in Russia, and in some of these other countries we're as foreign an investor as somebody investing from London might be, and so.
It's interesting, isn't it? I'm sort of thinking about the sectors and the type of businesses that you find attractive right now. I mean, can you explain a little bit about how you execute on your strategy? What sort of businesses really grab your attention?
Yeah, so we've had kind of, you're going to say that we're generalists, which I guess we are, but we do have four kind of core.
It's not evil.
No. But I'm about to say that we have sector focus, but again, they're relatively broad. So we've historically invested in financial services, consumer services and goods, IT, media, and telecommunications, and we've also done some oil and gas. So about 20% of our investments have been in small oil and gas companies, which is a different strategy, which we don't need to get into now. But really, 80% of our investments are in sectors which actually have similar pushes. It's the under-penetration story, it's the growing Russian consumer, it's growing purchasing power, whether it's retail banking or healthcare, it really is somewhat similar drivers that are underpinning that. And so the approach is really, if we have an economy which is growing at X%, 2 or 3%, if we can identify sectors in those four groups that are growing at 10 or 15%, and if we can find the number one or number two company, we have a real focus on market leaders, whether it's in their niche, whether it's in their sector or their region. We're finding market-leading companies in sectors which are growing faster than the economy overall, and an economy which is growing. We can find companies which have the growth. So the approach, the nuances in each of the sectors, because the competitive landscape is different. The entrepreneur, if you're going to an internet business, you don't sit in a suit like we're sitting right now. You sit in jeans or whatever, and that's the same in Russia or Silicon Valley. So there are nuances in how you talk to people when you take meetings and things like that. But the approach is identifying the sectors and segments which we find attractive, and then really focusing in on the leading companies there, and yeah.
Given the different needs of those different segments of the market, are your investment ranges is it quite broad in terms of investment size?
So as the economy has grown and as our fund sizes have grown, we feel like we've grown with the economy. So we still feel like what was mid-market 10 years ago might have been a $10 million equity check, whereas today it could be anywhere from 50 million to 150 million. That being said, we don't want to lose some of the somewhat earlier stage of businesses, so we can, but we also need to make sure that we're putting out the amount of resources that you allocate to a $30 million equity deal or a $5 million equity deal or $200 million, they're the same. And so we need to think about that, but we also want to be flexible because it goes to our approach on sectors. There aren't thousands of great businesses, and so being able to be relatively neutral on size of transactions, so from 30 million up to 150 or $200 million of equities, on sectors we've already talked about, on types of transactions, whether it's minority expansion capital, consortium where no one party owns control, or a control investment. What's really fundamental is the quality of the business and the quality of the partners, and the rest we can be somewhat flexible.
Okay. And a final question from me. You, I think, touched on a little bit earlier. In terms of the competition that you're seeing for deals, it sounds like your private equity peers are probably not the only people that you're fighting against in terms of getting to those really great companies. You're looking at a lot of local entrepreneurs, etc., people that are driven by slightly different needs. Is that correct?
I think that's right. I think that we're lucky. I look at our peers in other emerging markets where there are hundreds of firms who are really competing. We benefit on one hand by the fact that there aren't a lot of folks like us, and so by definition you're competing with a less number. So it's relatively easier. You don't need to go out of your way to kind of differentiating yourself is always a challenge, but it really is more driven by, again, the type of deal. So in buyout transactions where the owner of the business, let's just say you own a business and you just want to get the hell out of there, you don't care how much so you don't really care who you're selling it to. And there are domestic investors, whether they're oligarchic groups or local groups, who will pay higher prices, or their return expectations are lower than our investors. And so in buyouts, it's really been harder for us to compete with local folks.
Okay.
But when you want to find somebody who's going to partner with you, whether it's a consortium investment or minority expansion capital, and you want to make sure that this is somebody who's going to be there with you for 3 or 4 or 5 or 10 years, somebody who understands what it means to split the upside, somebody who's going to keep their promises, because that's where your choice of partner is important, and that's where I think that we have, that where the lack of groups like us really helps, because really differentiating yourself from a handful versus from 100 is less daunting a task.
Okay, so if I'm quite crude about it, growth capital or expansion capital is probably more of interest on a very generalist brush, if I can say, than a buyout, because the competition for those deals on the buyout side of it might be a lot more.
That's part of it, but we're also not in a buyout market yet where the transactions that we're doing are equity only, and where that will change as growth slows in certain sectors. But even companies which are selling control, most of those companies are still growing quite rapidly, and so they're using internally generated cash flow to plow back into the business for growth. And so when we use the term buyout in the context of private equity, we tend to think that it's levered buyouts and that sort of thing, when in reality, even companies where we're not taking expansion capital minority stakes, there still are, the quality of the business is still sort of an expansion or a growth for the most part. But that will change as the economy slows, or as certain segments of the economy don't grow as fast, and then there might be an opportunity there for some slight leverage to be used.
Fantastic. David, that is a great whirlwind tour around Russia and the sort of activities that you focus upon there. Thanks ever so much for your time.
No, thank you.
And I hope everybody enjoyed that.